Hi, and welcome to the Stock Scores Market Minutes for March 20th, 2017. This week we're going to talk about the difference between winners and losers, my regular weekly market analysis, and then, of course, the trade of the week this week on JBL. All right, winners and losers, what's the difference? I recommend making a list of all of your trades over the last year, over the last month, whatever you prefer, and sort them by profitability, putting the most profitable at the top and the least or the losers at the bottom. And then look at the most profitable 10 or 20%, depending on how many are in your list, and look for common characteristics. Just go through each chart, each situation, write down what stands out about that trade. Do the same for the worst performers. And then try to identify things that are different between the two lists. You may find that your profitable trades tend to be well above resistance, trading abnormal volume within a certain price range. Those are things that tell you that those characteristics are important and can become rules that you might modify in your strategy. Are there things that commonly happen with your losers that are not common in your winners? And if so, modify your rules accordingly. All right, let's get into this week's analysis. Starting off, the S&P 500 30-day 60-minute chart. So we've got a falling top that has formed an upward trend line that is really being threatened. You can see we're just starting to tickle through it from a falling top. Ultimately, I think what you want to watch for is whether this horizontal line of resistance breaks. Could happen early next week. And if so, I want you to take a short-term cautious approach to the market. Now, the long-term outlook is still positive. We are in an upward trend. However, price is quite far above the upward trend. Now, we could use this trend line, which is really the trend line since the election, US election. We're not so far above that one, but we do have some room for downside even there before we find support. So I think if you see that short-term support get broken, I would expect some profit taking to finally come into the market. On the Russell 2000, also an upward trend line. Not considerably far above it, sort of just on the upper half of that channel. So not particularly bad, but still I think we will see some selling pressure if the S&P 500 rolls over. This will probably roll over as well. I just don't think there's as much risk in the small cap stocks because they really haven't participated as the larger cap stocks have. Moving on to the Canadian market. Here is the Toronto Stock Exchange 30-day 60-minute, and you can see a series of falling tops. That means pessimism is building in the short term. We have support there. Look for a breakdown through that support from this descending triangle pattern. If that happens, lower prices are likely ahead. Looking at the longer term chart, that would bring a break of this upward trend line. We are still above it, but if we get a breakdown of that short term chart, we may also be breaking this, which would maybe take us down into this support zone. The market has run up a long ways and it's due for some profit taking. I would love to see it because these pullbacks recharge buyer interest. They get the buyers interested again. Right now, it feels like the buyers are pretty complacent to buy more stock. Moving on to the TSX Venture, had a little bit of strength at the end of, or in the last week or so, largely because gold got a little bit of support. We are still below resistance and we are above support. Are we going to rally up to here or are we going to break down through there? Hard to say. If we break down through here, then I want you to be very cautious. As long as we can stay above this line, be on the sort of optimistic side of neutral. TLT, which is the US bond market. Interesting that this week, of course, the US Fed raised interest rates only a quarter point and the bond market went up. And you'll see that the US dollar went down. I'll show you that in a moment. It's kind of peculiar, and what it really demonstrates is that the market maybe was going into these decisions worried that there would be much greater increases expected for 2017. And the Fed's comments, I guess, didn't make the market think that. So although interest rates went up, it was deemed to be a bullish Fed announcement, and we have held support on treasuries. I don't know if it'll continue to hold, but that is the situation we find ourselves in now. We are still in a downward trend. And so I think, I don't want you to be optimistic about bonds because they don't look that great, but they have held support. Here's the US dollar chart. And there you can see the Fed announcement on Wednesday the breakdown from a falling top. That really indicates that the US dollar more likely to go lower than higher. This area of support is next, and I think we'll get there in the next week or two. On gold, we had a little bit of a rally on that news. Again, the market maybe expected worse from the Fed, didn't get it, so gold took a little bit of a jump. But you shouldn't think that gold is yet a good chart because we remain below the downward trend line. The positive is that we're building some rising bottoms here, and if we can break the downward trend line, then that would be a positive. It hasn't happened yet, so I would call this a neutral chart in the short term and a bearish chart in the long term until this downward trend line can be broken. Oil has been weak in the last couple of weeks, but it is really just kind of pulling back into support. It's got a little bit more downside until it gets there, not a lot. And I think that we will just see oil remain in this sideways narrow range. Do not be a bull until it breaks to the upside. Do not be a bear until it breaks to the downside. Fear, really at a low. This is a very short-term 30-day, 120-minute chart, but you can see that the VIX just continues to go lower. It has these brief spikes. They don't last long. I would call this a market that is very complacent. It shows that investors aren't worried about anything, and that concerns me a little bit. If we do get a break of the upward trend line on the S&P 500, for example, I think you'll see money run into this quickly. Right now, it is cheap to buy insurance. Really what the VIX is an indication of the implied volatility in the index futures, and that means that you can buy insurance cheap. You can buy put options to protect your positions at a low price because the market doesn't expect anything bad. And given that the market is starting to test those upward trend lines, I don't think it's a bad idea, if you have a larger portfolio, to protect some of those assets with some out-of-the-money puts that would become valuable if the market did correct. So my ratings then: bullish long-term still on US stocks, neutral short-term. Canadian stocks, bullish long-term, neutral short-term. Remaining bearish on gold long-term, but upping my rating to neutral short-term. Oil, neutral long-term, bearish short-term. We do have some selling pressure in the last little while, although we are nearing support. The long-term upward trends in stocks are still in place, but there are early signs of buyer burnout. Watch for breaks of short-term support as a signal to get bearish. Gold showed some short-term strength, but still fighting that downward trend. And oil, although weak in the last 2 weeks, is nearing support, so it should bounce soon. Fear is low, complacency is high. Let's go on to this week's trade of the week. This is a stock that came up on March 16th. It met all my rules. I'd like to rate my trades before I take them. In other words, look at the daily, the 13-minute charts, give them a rating. This one was an 8 out of 10. The highest I give is a 9 out of 10. I don't ever give a 10 out of 10 because nothing is risk-free. And so that meant that this one had great potential. It was breaking to new highs. It was breaking from some low volatility. It had abnormal activity, had great liquidity. Those are the things that give me cause to give it a good score. On my pullback play strategy, the entry signal is right there. You can barely see it, but there's a little white dot there. That is my, what I call a message candle indicator, breaking a pullback. Those indicators available to my active trader students, those who want to use TradeStation. I will give you those indicators if you are one of my students. And this particular trade had a nice run, moving up 1, 2, 3, 4, 5 and a half RR. That means if you risked $1,000, it led to a $5,500 profit. That was the trade of the week. Short day trade, worked out well. If you want to continue to see my videos as soon as they are put out, please subscribe to the channel. Like the video if you thought it was good. And most importantly, trade well. We'll see you next week.